Hello everybody, so this is my MT4 and this is what I trade on my iPhone. And yeah, so today in this video we're going to be sharing what kind of trading I am learning and kind of look at the charts in indices. So stay tuned. If you're new to the channel, please subscribe. Appreciate it. Want to disclose I'm not a financial advisor. This is just for entertainment information purposes. So yeah, basically this is your MT4. So you can basically trade it right on your phone. All it takes is just to go to your app store. So you open that, boom. I mean, you got to download it. I already have it downloaded, so it just went directly to it, but you'd have to download it and all that. But for myself, it's already downloaded. So yeah, so these is what's in my watch list. So you can do FX majors. I have them, a lot of them all there. Say like Aussie USD, New Zealand USD, GBP USD, Euro USD, I think USD Chef. And yeah, there's just 6 majors. And then there's exotics where there's like USD ZAR, that's South African Rand, Singapore dollar, Swedish krona. So not too many people really trade too much about these, but I've heard of people trading the Mexican peso. So that's kind of what's up. Hong Kong dollar, Norwegian, and Czech Republic. So in different crosses. So a cross is basically, if it's not a US pair, then it's a cross, say European dollar towards the GBP dollar, the Great Britain pound dollar. That would be your cross. So yeah, that's kind of what's up. And you know, for the exotics, they have crosses, but this is the regular crosses right here, right? So I have a few of them already here, but you got New Zealand CAD, GBP Oz. So GBP is Great Britain pound, and AUD is Australian dollar, and Euro Chef, Swiss franc, and the Euro is EUR, and Euro Odd, Euro Austrian, and the Canadian Chef, Canadian dollar, Swiss franc, and Australian dollar, New Zealand dollar cross. So they basically trade against each other based on strength, right? So if the Australian dollar is stronger, then it's going to go up in price. Now, if the New Zealand dollar is stronger on that thing, then that pair would eventually go down because the New Zealand dollar is overpowering the Australian dollar, right? So Australian dollar is fighting against the New Zealand dollar. So now if the Australian dollar is stronger than the New Zealand dollar, then the Aussie NSD is going to go up in price. So you learn that in the academy, and you know, I'll leave the link in the description, and if you're interested, you can check it out. There's a lot of great educators, Kim Torres, Luke Longmire, Delano Bands, and Lasaldo Tavares. I mean, I'll give you links to these guys on Instagram. You can check them out for yourself, see if they're legit. These guys got anywhere from like 10,000 followers to 100,000 followers. And in the Forex game, that's pretty impressive. I mean, you're not talking about some supermodel, you know. It takes a little more talent to get that many followers on Instagram, you know. So yeah, let's move along. So indices, I've got them all, but you got the Aussie 200 that I left out, and you got energy, you got UK oil, you got US oil you can trade. You got cryptos, you got Bitcoin Cash versus Bitcoin dollar, Bitcoin versus US dollar. You got Dash versus US dollar. You got Ethereum versus Bitcoin. You got Ethereum versus US dollar. You got IOTA. I don't know what IOTA is. You got Litecoin versus US dollar, Litecoin versus Bitcoin. You got Monero versus Bitcoin, Monero versus US dollar. You got Ripple, XRP, USD. So yeah, it covers a broad range. So yeah, Yep. And then you got stocks as well. You got eBay, you got Apple, you got Hilton, you got McDonald's, you got Pfizer, you got Procter and Gamble, you got Visa, you got Twitter, Tesla, ExxonMobil, you got MasterCard, you got Intel Corp, you got Johnson & Johnson, you got IBM, International Business Machines, you got Goldman Sachs, you got Google, you got GE, you got Facebook, you got Ford, you got SPX500. So it's kind of crowded. I got too many lines there. I have the Fibonacci as well. But I got the moving averages. So I got the 50, the 4, and the 10. So the 4 is the moving average, the simple moving average, and the 10 is the EMA, and the 50 is the EMA. So that's a kind of a setup that I learned in Gold Cup that I'm trying to perfect. But there's other strategies that we learn in Gold Cup, because not every strategy is going to work in every situation, right? So it's good to be kind of a little bit diverse, right? I mean, you can't necessarily just trade off of what's set up all the time. You kind of have to improvise sometimes, I think. So yeah, you look at that cross, right? And then it just keeps going up. So that's kind of an indication, right? Or if you go into shorter time frames, you can really see that. So see the big white bearish candle, and it was just going below the 61.8 Fibonacci, and it basically crossed over, and it retested that area, right? So you want to do the break and retest. It's just based on the wick, so it ended there, and then the wick ended up coming and hitting it. So it hit it. So it was over that line, so it was strong enough in the bearish direction, and then it retested, and then it became a bear candle, and that's when it went from 35.60 all the way down to about 35.45 in a 4-hour candle. So that's a bit of money there in 4 hours. 4 hours, that would, you're talking close to $100, $115 ish in a 4-hour candle. So, on a 0.01, that's one of these SPX. So you do the math. If you're doing a 0.1 or you're doing a 0.25 rate, the amount of money that you can potentially make in the markets when you progress and get your skills good. So yeah, basically you got the parabolic SARs on the bottom, those blue little gem diamond things. And when they're on the bottom, it's showing that there's it's in a positive momentum. And then you see it up top, that's in a downtrend. So when it's on the bottom, it's in an uptrend. And when it's at the top, it's in a downtrend. So you see how it went down to the 0 Fibonacci retracement area, and then it came back up. So, because when it hits those levels, it wants to test like the 23 and the 38 fib, and then eventually wants to test the 50 retracement. So but it bounced back down. So we'll see. And the RSI is kind of wants to come up. Look, I was kind of curling. So showing that it kind of wants to move in the right direction upwards. But I mean, it can change because indicators are lagging in the markets. So your fastest response is based on candlesticks. So if you look in say like the 5-minute rate, you could see right here, like it went up all here. Then in the 5-minute, that would be the time where you could see the time to get out. So you can see the cross right there. It's like, okay, maybe I should get out right now. And then if you listen to that, when you get out, say at 34.37, and then it's 34.18, you're saving yourself $19, right? So that's kind of the skill set of making sure you really finesse your entries and your exits, and you're consistent in the market. I mean, I got to do stuff. I got to be more consistent and stuff in the markets with my entries and exits, but I'm just sharing my knowledge that I'm learning in the academy. So yeah, that's kind of what it is. I'm a work in progress, right? This isn't the easiest skill to finesse, but my dedication is going to get me to where I need to be. So it is what it is. And the SPX 500, right? So yeah, I mean, there's a lot of different things that you can make money on the markets, right? So you see how on this setup, see how it goes in these little pockets on the moving average. That's the time to buy when it goes into those pockets, and see how the parabolic SARS is still going upwards, and then like the candle's still green, right? So it's showing, and then it's also pointing upwards. So that's a way to show that the market's like continuously trending upwards. So you just ride those ladders up, ride them up. And yeah, basically from like 3,500 or so to 3,541 right there, based on that little pocket, right? That little pocket right there. And then that cross, the moving average cross, the blue cross, the purple. So that's a bullish indicator too. So I mean, it's good to have like multiple confirmations to enable the trade. You know, there's enough confirmation. But I mean, things can move fast, right? Because, you know, you'll be looking at it, right? And then all of a sudden, it'll build in the candle. And you're like, well, where's it going? Is it just going to fake out, right? So, I mean, it takes a bit of skill to kind of see all that stuff, right, in finesse. But, I mean, you're basically seeing that the parabolic SARS was below. So it's like a change in the direction. So until it starts trending in the other way, I mean, you get in at say like 3,500, and then say it's like 3,510, and then there's that kind of like bearish thing. Say the parabolic SARS was showing upward at the top, like right here, then you could get out of the trade, right? So that's just a strategy, right? I mean, there's a million strategies in the market, but I'm just saying that I'm just going back on my charts because I'm looking at the SPX 500 and just the amount of potential money that we can make in the markets by just seeing what I'm seeing right now, right? You just back testing, being obsessed with the markets, right? You see that little pocket right there? Get into that pocket, and then boom, like right when that first parabolic SARS on the bottom on the 1 hour, and then see how it went like that, and then it tested that zone, right? It tested that zone, so it just tested that zone, and then it just moved up, right? So, you know, 35.50 to 35.75, then you start to see the parabolic SARS change the other direction, then you can get out of the trade. So yeah, sometimes, as well as these parabolic SARS, see how this green one, right, that's got that long wick around that blue line. We'll see how that wick is just touching the parabolic SARS. When there's so much momentum, it'll actually make that parabolic SARS go the opposite direction, because there's a calculation in the whole thing, and it'll make it go the other way. So then it'll be like, oh, it's a different trend, right? But that trend can only be for say like two or one or two candles, sometimes two, right? So just because it changes the direction doesn't mean it's just going to continuous. But see how here it gets into that pocket, you know, see it here, get into that pocket, boom. And then it changes the parabolic SARS as well as the moving average crossed. So those are two nice indicators and a nice kind of bullish candle. So you can see that going. Now you're watching that, like the parabolic SARS continuously going on. So yeah, keep continuously going on, continuously going on. So then there's a little bit of a downtrend, but that's not over. It's just taking a breather, right? And then it just keeps going up, and then it takes a breather down there, right? And then it goes into that pockets, and then right around here, the moving average cross, and look how it continuously goes up, right? So yeah, then it gets into this pocket, moving average crossed again, boom, keeps going up, boom. So this is just a beautiful chart, you know, showing so many opportunities in the SPX 500. But 3342.7, and yeah, it just keeps going up, boom. Boom. Moving average crossed on that white candle. 33.21, parabolic SARS on the bottom. Keeps going up, 33.45, boom. 33.20, 33.45, boom. goes in that little pocket, boom, goes up. Goes in that little pocket, boom, goes up. Boom, goes in a little bit of that pocket, boom, goes up. Parabolic SARs continuously going on the bottom. So yeah, this is the 1 hour, just showing so many times you could have made so much money based on the SPX 500. And yeah, basically, okay, so then at the bottom, so cross right around here, still the parabolic SARs on top, hadn't really changed the direction, but it was immobilizing itself to get to the next leg up. And then, crossover, boom, she's up. Yep, just 1,000 times. 1,000 times. Sometimes this is gonna get just so easy. It's just gonna be like picking money off the market. You just watch this cross, boom. So sometimes when it crosses over the moving average, it's for a very short time. So it basically will be up, and then all of a sudden it'll just kind of wrap around and it'll go the other way. So it's not a perfect strategy. No strategy in the market's perfect. There's definitely there's just no way to be 100% perfect in the market. So yeah, that's basically the SPX 500. Now let's go to gold. So yeah, it's kind of been choppy in gold. Like crossed here, but it's just really choppy. It kind of crossed here. So there was a part of the whole fib retracements. So I had the 50 right there. And then boom, cross kind of there. Cross the... So yeah, this didn't really cross in a nice ways, but it did move a lot, right? So that could be done just by using the price trap. So with the price trap, you could have found that trade by basically looking at this. It broke out of this consolidation area right on this to the left. You see that first candle, then the next one came back, retest that area, and then goes into a bearish candle, and then it continues on. So this had no wick on the top as well, so you don't really want much wick on the top when it's going into bearish. You don't really want any wick on the bottom or the top when it goes really bearish. Or if it to the opposite, when it's going bullish, you don't really want too much wick on the top or the bottom. You kind of want a lot more bold body, right? I'll show you a candle. Yeah, something like these two ones, right? Those are good, especially the one at the top, just like minimal wick, right? But just super powerful, right? So those are the kind of ones. And then you also see the moving average crossed again there, right? So then, and the parabolic SARs on the bottom, right? So that's pretty freaking cool, right? So yeah, that's what's up. 1967, that would have been a very good trade setup right there. I mean, you could have done it on the price trap as well. So price trap, boom. Boom. Goes out of the price trap, boom. Take it for trade. Again, sometimes the wick, it'll come out of the wick and then it'll come back into the trap. So it's not fool worthy, but if there's enough momentum, and especially because the whole moving average cross too. So I mean, that could be almost enough indication, as well as the parabolic SARs on the bottom and the RSI kind of coming towards the upwards. So it's not going downwards. The leading edge wasn't not going downwards. It was going up. So it's just slowly, incrementally going up. So that's a good indicator that the RSI is working in your favor, and the parabolic SARs on the bottom. So yeah, that's kind of what's up with XAUUSD. Let's go to US30. So let's do this. So see on the 4-hour candle, crossed right there, 28,000. 28,822 is when it crossed. and then it went as low as 27,783. So even if you dropped it, even halfway of this big 4-hour candle at that, and you got in the trade right around 28,820, all the way to about 28,440 would be about just a half of that distance. Or if you went all the way down to 28,250, that's a big movement, right? But you don't want to have too much of a stop loss on this trade, and you don't want to have a big long position on US30 unless you got a really big account. Because if, say, you set a stop loss at $200 and say you have a 0.1 lot size, then you're risking potentially $2,000, right? But this thing moves a lot, right? That's why you're better off just trading really, really small, but also giving it a bit of room. Say like 30 to like $60 on the trade. You're giving it that much room. I mean, you could get it tighter, but you really, really have to get your entries right. Because just look at this wick right here, 28,000. That was literally, $60 ish on that wick. And, that could happen in like 15 minutes, right? So you could think it's at the bottom, like say this was an actual green candle and we're going in the other direction. You could get into the trade, and then all of a sudden you gave it only $60, and it was like you started right here, and then it's like you hit your stop loss. So I mean, that's why you really, really have to finesse your entries on US30. You can't give it too much room and all that stuff. So it's a very tough game to handle. The US30 is not for everybody, especially with the big money on it. But basically, a lot of money can be made. And if you say you have anywhere from like a $25 to a $50 stop loss, I mean, some people can scalp it for $10 stop losses and not get stopped out, or sometimes they'll get stopped out. But I mean, you're not going to get stopped out as much if you have like a $30 to $50 one. But you also don't want it to go into different structures, right? So you kind of want to set it to a certain accuracy. So basically, say like it's right there, 29,196. So then let's get another line. So that's 29,009. So that was about $190, like $187 in there. And so what that means, it's a lot of money, right? But you need to figure out your entry and really perfect it, right? Because that's $190. So if you're not in the right entrance, and say you get into the trade and you're taking it for a buy above this, say at 29,206, well, ideally it would be below 29,009, right? Because that way it's out of the box, and that way it won't come in. But if you let it get above the entrance, where it closes, the candle closes, that 15-minute candle closes, and then the next candle, it has a wick, or there's like so much momentum like this where it just continuously goes on. But there was a little bit of a break and retest on this. I'll try to find it on the US30. So yeah, so right here, where was it? Yeah, about right here. I'm showing the green line where I'm talking about. So right here, it broke the area, and then it retested on that moving average. So the moving average can be the support resistance zone as well. It's in there. So that can mean something, but it basically, it retested, if you put the line up a bit, I think I have my fib a little bit off. But yeah, there's definitely retested the zone a little bit. Like that first candle, if you put it around here, well, it wasn't perfect actually. But it came back, right? It came back and it hit the moving average. So I think that's It's pretty good confirmation. But again, you got to be really careful, right? So what you could probably do, again, this isn't financial advice. This is just what I'm thinking about doing, right? Because I'm perfecting my craft, right? I'm perfecting my craft. So it would be like, okay, 28,840. Say you got in about there, and then you put your stop loss 28,830, get in. Try to get in 28,840, and then put your stop loss, say like 28,908, right? I mean, it's probably, you could put it tighter and then just re-enter. If it, if you get stopped out at say like $20 or $15, just re-enter, because the big cross, right? As well as the RSI is like going down. But the best would have been actually to get into it, now that I think about it, would be around here, right where that cross was, say like 29,040, and it crossed, and basically it's like touching the moving average, but there's no wick on it too. So that's really nice that there's no wick, so it's not coming back. There's not really a deterrence like towards going to the upside. It's just going down pretty much. So then, continuously hold that. Oh, here's a perfect. Yeah, it's tricky. US 30 doesn't really do the same kind of break and retest that the SPX 500 does, because SPX 500 is a lot slower than US 30. So it's kind of hard to really perfect it.